Hey everybody, Smart Silver Stacker here. Hope you're doing well. So the stock market crash, which began on Friday, carried into Monday. This is what the stock market was doing on Monday. It appears that it is over, at least from the perspective of today. However, when we delve into the reasons why stocks are recovering the way that they are today, I think it will become clear that the real crisis is just getting started, and it's going to be very, very bad indeed. So let's delve right into what's going on and why stocks are in the green in a big way today. Now, in order to tell this story, we have to go back about a week here. This headline from the BBC: Japan hikes interest rates for the second time since 2007. And so this ill-advised rate hike by the Bank of Japan was a major contributor to why we saw stocks around the world sell off in such a big way over the past few sessions. This hike, which was largely done for political reasons, had to do with rising inflation in Japan. It had some very serious knock-on effects. Japan's Nikkei had the worst day since the 1987 Black Monday crash. That was on Friday. And then on Monday, it had the worst day in history. Whoops, guess we shouldn't have raised rates. But then Bank of Japan governor, the deputy governor, comes to the rescue yesterday with this statement: the Bank of Japan won't raise rates when markets are unstable. So let's delve into what he said a little bit here. Said that they won't raise interest rates if financial markets are unstable. This is the quote: as we're seeing sharp volatility in domestic and overseas financial markets, it's necessary to maintain current levels of monetary easing for the time being. Now, this has had a very positive effect on Japanese stock market. Yesterday, the Nikkei had the best day since October 2008, and it was the single largest increase in a single day in points. Maybe not in percentage terms, but in points. Stock market really liked that promise of continued easy monetary policy from the Bank of Japan. Now let's talk about why that rate hike was such a problem for global markets. And it has to do with the yen carry trade. You've probably heard a lot about that over the past few sessions, but the gist is that the interest rates in Japan have been kept artificially low by the Bank of Japan for a very long time. And this Japan carry trade, the yen carry trade, is where people borrow yen. Investors will borrow yen at a very low interest rate in Japan. They'll buy up other assets, say like US dollars, and they'll use that to invest in higher yielding assets. And because they were able to borrow the yen at such low interest rates, there's a lot of money to be made here with this sort of currency arbitrage. But when the Fed, or rather the Bank of Japan, began hiking rates, it was a real problem for this trade. Now, this is a chart of the US dollar against the Japanese yen. So what you got to understand is when this chart is going up, the US dollar is weakening because you can buy more. It costs more yen to get a dollar. So that was the trend for a long time. But the Bank of Japan started hiking rates. That actually caused a significant strengthening in the yen, as you can see this chart coming down here. And the reason that's a problem is if you're trying to do a carry trade, you borrow a bunch of yen up here, and then you buy dollars. It costs you 162 yen to buy the dollar. Well, then, even if you manage to get some kind of yield, if down here you try to get back into yen, you're only getting 144 yen for your dollars. So that's a real problem. But you can see that immediately following that announcement from the Bank of Japan that they won't hike rates in unstable markets, and you can basically read that as being unlimited easy monetary policy, right? Because markets are never going to be stable again if he's making this kind of commentary. I mean, all that they need is a little bit of market instability, and the Bank of Japan will recommit itself to easy monetary policy. So they've put in a de facto perpetual money printing machine here, and the yen to US dollar ratio here did exactly what was needed following that commentary. The yen weakened significantly, and now looks like the carry trade might be back on. And this is what we're going to hear from central bankers around the world anytime we get any indication of economic weakness. And so basically, I think it's almost guaranteed that these stock markets continue to rise, asset valuations continue to increase. I mean, this whole yen carry trade thing is part of why we've inflated all these wonderful asset bubbles in the first place, right? Because there's all this cheap yen that can be borrowed. And when you allow people to borrow at a very low, artificially low interest rate, it inflates huge asset bubbles. And we heard actually recently from Chicago Fed President Austin Goolsbee, on Monday. He said this. He said that if the economy in the U.S. deteriorates, the Fed will fix it. So he said, I'm not going to bind our hands of what should happen going forward because we're still going to get more information. But if we are not overheating, we should not be tightening or restrictive in real terms. And then went on to say this: the Fed's job is very straightforward: maximize employment, stabilize prices, and maintain financial stability. That's what we're going to do. We're hearing from the same thing here, that the Federal Reserve, should markets, show any sign of weakness, they're going to get in here and quote unquote fix it. This is what he said about that. He said, we're forward looking about it. So if the conditions collectively start coming in like that on the through line, there's deterioration on any of those parts, we're going to fix it. Now, what does fix it mean? I mean, is it like the fix is in? They're going to rig it. Basically what he's telling you is that if markets begin showing a sign of weakness, the Fed is ready to stand by as the buyer and lender of last resort and inject however much money is needed to reinflate the bubbles. So, yeah, the stock market crash is over. I mean, stocks are in the green today. Everything's looking good. And yet the real crisis, which is a currency crisis, it's a sovereign debt crisis, that's just getting started. Now, right now, investors are anticipating significant cuts by the Federal Reserve in September. The majority anticipate a 50 basis point rate cut at the next meeting, and by September, or rather by December, they're factoring in significant easier monetary policy, and that's going to mean a significant devaluation of the U.S. dollar. Now, asset bubbles are going to keep getting propped up, of course, until the Federal Reserve's printing no longer has the desired effect. I mean, and that is when the real crisis begins, right? It's a crisis of confidence in the currency, because the Fed only really has one tool here. Central banks around the world only have one tool, and that is a printing press. And they're showing us here, they're tipping their hand that fiat currency devaluation is the name of the game. That's why I'm still buying gold and silver. I'm still stacking gold and silver. Both metals on sale today, by the way. You can check out sdbullion.com. That's today's video sponsor. That's where I buy my gold and silver. There's a link down in the description if you want to do some stacking. Now let's talk about gold and silver, because silver has really taken a beating here in light of this stock crash, this asset sell-off, this pan sell-off. It kind of dragged silver down with it. And while stocks have recovered, silver really hasn't yet. I mean, it's hanging tough here above a strong resistance level, about 2650. You can see that's a level that served as resistance for a long time. Now it's serving as support. But given what we just heard from the Bank of Japan and from Austin Goolsbee there, the Chicago Fed president, I think it's clear that, this is a gift, right? This is a buying opportunity like none other. When we were up here around $32, I didn't think we were going to see 26 again. And a lot of people who watched the channel said we would. Now, I don't know if they were forecasting a global stock market crash, a major correction like we just witnessed, but they got their wish. They were right with the forecast, down here about $27. I don't think this is anything to get concerned about with silver. I think, again, it's just a massive buying opportunity. Now, I want to zoom out and take a look at the big picture here when it comes to these assets, because there's been a lot of fear around this stock market crash. I mean, while stocks were crashing, I bought on Monday. I was viewing it as simply a normal correction because, again, we know they're going to print a ton of money, but Let's just zoom out and look at the big picture here for stocks and for gold and silver. So the Dow Jones Industrial Average year over year is up 12%, even with this crash that we witnessed. Oh, it was a terrible crash. It's a normal correction, right? Things don't always move up in a straight line. Same thing with S&P 500 year over year. Even with this correction that we've seen, it's up 17%, 1776 actually, one of my favorite numbers. But look at that, 1776. And the NASDAQ is up 19.29%, even with its recent correction. Silver, I know a lot of people get very doom and gloom when they see the price of silver come down. It's like people have very short memories, very short attention spans. Now, I will give you this. Silver is a very volatile asset, right? If you don't have the fortitude for an asset that has significant swings up and down, then silver's probably not for you. But look at the year-over-year performance of silver. It's up 16.7%. It's outperforming the Dow Jones Industrial Average year-over-year. So, I mean, silver is still doing very well here. And again, this buying opportunity, this drop, I'm not telling anybody what to do because I can't give financial advice on this channel, and I wouldn't want to because I'm not a financial advisor. But I am telling you that I will be stacking at these prices. I mean, this is a very nice entry point here, and I think we should view it as a gift. Same story for gold. Now, gold has held up a lot better during this crash, really showcasing its ability to serve as a store of value and a safe haven. I mean, it did come off the all-time record highs, but not that much. It's still up 23% year over year. And the other thing that's up massively, of course, is the U.S. national debt. Now, this is the real crisis. This is the thing you got to watch out for, not the price of the stock market. It's the U.S. debt and the debt market, because we are issuing this debt, borrowing at a near record high level. I think the only time deficits have been higher was at the height of the pandemic crisis. And yet, here we are, allegedly at the best economy in the world. We're the envy of the world, right, according to the leadership. And yet the only way we're managing to eke out any economic growth is by massively expanding the levels of debt and deficits. And this is where the Fed comes in, right? Because at a certain point, investors are going to be a lot less interested in buying U.S. debt. They might view it as a safe haven right now, but eventually this is going to become clear that the only way this can ever get paid back is in massively devalued currency. And that's what the Federal Reserve and the Bank of Japan and all the central banks are signaling to us here, that anytime there's any correction, any weakness, any air coming out of the bubble, they are going to print. They're going to print. Someone in the chat says I'm a cutie patootie. Thank you. And thank you to everybody who tunes into these live streams, by the way. Do me a favor. Please smash the like button. Subscribe to the channel if you haven't done that yet. And, get ready for massive dollar devaluation. It is around the corner. It might be years down the road. Who knows? It could be months around the corner. There's no way to time these things exactly, but when the next crisis rears its head, whether it be a global war or a coordinated dollar dump among our adversaries, or simply the basically guaranteed massive expansion of deficits to the point that, the only way to finance the spending is for the Federal Reserve to get in there and buy up the debt directly, create money out of nowhere and lend it to the government. Something like that is inevitable at this point. I mean, and if you can't see that, then I don't know. I guess just go get out of silver, get out of gold, get into dollars, and collect 4.5% in a high yield savings account and get wiped out. But for me, I'm going to keep stacking silver. And one reason that silver is so appealing is the volatility, right? Yes, to the downside, it can be a little scary. If you're playing around with leverage, you can get wiped out easily. But if you're stacking physical, the fact that silver is so volatile should be a positive thing if you're okay taking on a slightly higher level of risk than, say, with gold. Because the thing about silver is it's a very small market. That is why silver is so volatile, right? The market cap of silver is much smaller than gold. It's even smaller than Bitcoin now. And Bitcoin itself has a relatively small market cap relative to other assets. The market cap of silver is tiny. And then when you reflect on the fact that the market cap of silver is almost entirely paper, the vast majority of silver that is traded is paper silver. It's like hundreds of ounces of paper contracts to the one underlying physical ounce at these exchanges. Then you understand that the market cap of physical silver is very, very tiny. I mean, sure, it's billions of dollars. I mean, today the price of silver is about 27 bucks. Annual silver production from recycling and mining is about 1 billion ounces per year, and it, declining, by the way. It's not going to go up until prices are much higher. But that means the market cap of all the silver produced in a single year is $27 billion. That is a rounding error when it comes to government spending, when it comes to the market cap of any of these major corporations. All the silver mined in a year is valued so cheaply. And so, look, a lot of people see silver go down. I mean, there's a lot of people who like to gloat about silver going down. It's weird, the internet trolls. I see them in the comments saying, oh, silver, the perpetually underpriced asset. Well, look, if we zoom out 5 years, I started this channel in 2017, and this only goes back, obviously, 5 years to 2019, but price of silver in 2017, I think, was close to where it was in 2019. It was, around 16, 17 bucks. The price of silver over the past 5 years is up 60%. So, I mean, if that's not enough, I don't know what people want, right? I mean, yes, you could get rich overnight, I guess, if you buy the right cryptocurrency or you invest in stocks with a bunch of leverage, but you could also get wiped out very easily doing that. Whereas, when you stack physical metal, you go look at your silver, it's still there, right? So we saw, the price of everything tanking on Monday. Oh, so scary, Well, I mean, I didn't really worry about it at all, because when you go look at your physical silver and your gold, you count the ounces, number hasn't changed one bit. And we know that these are two of the most underpriced assets in the world right now. So, are stocks going to continue moving up? Sure. And you should be diversified. I mean, I would take advantage of money creation being pumped and inflating huge asset bubbles. But you also got to understand that anything you put into these paper assets, digital assets, is circumspect. You got to be very circumspect about its availability. It may not be there one day. I mean, Monday, when markets were crashing, a lot of people went to log into their Schwab account, their I don't know if Ameritrade exists anymore. I saw several of the online retail brokerages. They weren't even available. You couldn't log in for hours. So that gives you a little bit of an idea of, how safe these assets really are. And, if you've read The Great Taking, you know that these assets, you don't actually own them anyway. You don't get first dibs in a collapse, right? So this stuff is maybe a vehicle for generating wealth if you play it right, but it's not real money. It's not real wealth. With gold, silver, as Clifton Murphy says in the chat here, you don't need internet. You don't need a computer. You don't need a phone. You don't need electricity. You don't need a broker. You don't need a full moon, etc. That's a funny comment. You just grab them. That's right. And they're there. And they've been money for thousands of years. It's not going to change anytime soon. The fact that, silver has been demonetized and doesn't serve as a monetary asset right now, it's part of why it's so cheap. What's the gold to silver ratio at right now? We can go look. I mean, it's incredibly high. Look at SD Bullion. They've got a nice chart of that, I think. Come on, SD. There we go. What's the gold to silver ratio right now? 88.39. I mean, I'm stacking silver here, folks. I don't know. I like gold too. Gold's great. I stack them both, but silver just went on a major sale. In June, gold to silver ratio was as low as what? It was under 75. Now it's 88. This is very near the top of the range. If you look at the totality of this chart going back to 1994, see, there's only a few times when the gold to silver ratio is higher than it is right now. In 2020, during the pandemic sell-off craziness, where silver went down to 12 bucks, gold to silver ratio was only, 118, I think, at the very highest. Now we're at 88.39. And, if you don't think we're in a metals bull market, again, silver up 60% over 5 years. Gold up 23% over just the past year. We are in the midst of a precious metals bull market, and dips are to be bought. They will be more extreme in silver because it's a more volatile market. But the small size of the silver market, when, the real crisis hits, when people get the memo that the U.S. is borrowing more money than it can ever pay back, there's going to be a lot of dollars that want to make their way into physical assets, physical silver. And a futures contract isn't going to cut it when the real crisis hits. So, you're going to want to have a couple ounces of silver. That's my take anyway. Let me know what you think in the comments down below. Stay safe.